Hello everyone. In this question in particular, I want to demonstrate what happens when the provision for bad debts they are in increase compared to the previous provision for bad debts. And usually the previous provision for bad debts were given in the trial balance, and they will be on the balance sheet account section. So when you now calculate the provision for bad debts, then you find that the figure that you calculated for the current year is more than the figure that we have for the previous year, then that will constitute an increase. So how do you deal with an increase? But looking at the question, it says you are given a pre-adjustment trial balance on 30 June 2021. Debtors control in that trial balance were given as 573,000. So the year end is 30 June 2021. Then provision for bad debts are given it's 21,300. Then we're given adjustments. Normally, you see the calculation or the adjustment for provision for bad debts comes later. Right, you need to look before that are there any other adjustment that relates to debtors, because you calculate the provision for bad debts on the standing debtors on that day. So if there is any adjustment on the debtors, you need to make sure that you account for that adjustment before you calculate the provision for bad debts. So before you calculate the 4%, you need to adjust your debtors if there are any other adjustment that lead to the adjustment of the debtors, that is the debtors control. So in this particular question, they were sold merchandise on credit to a debtor for 13,200. These goods were sold at a markup of 60%, right? So we don't really need to calculate that because we're not focused on cost of sales and everything that has to be done when you're doing the income statement, where you need to adjust your cost of sales. But in this instance, we're not going to use that 60%. This transaction was not recorded, so this transaction was skipped. So if you need to adjust your debtors control. So you have your debtors control. That will be 573 100 plus, right? This was skipped completely, right? It was not recorded. It's an invoice, right? You sold merchandise on credit, that means it increases your debtors control. That is 13,200. Right, then it goes on to say the second one, an error of 2,750, in amount, sorry, of 2,250. That's an amount of 2,750 received from a debtor Kahiso, a debtor, right? So Kahiso was a debtor, you paid us 2,750, right? Whose account was previously written off. So this account was a bad debt, so you have written it off because the person was not able to pay, or you tried to contact, you couldn't get hold of them, so you end up deciding to write off because there's no need to keep it there. When you have realized that you won't get it, it was written as a bad debt, so that was a bad debt before, but later on he came and paid what he orders, then was posted to the debtors control, right? So this bad debt recovered, right, was posted to the debtors control in error, so we need to correct that. So if you post it to the debtors control, basically means you are reducing the debtors control again, so you need to correct that. We need to add it back. That's 2,715. If you add those, you get let me see, that's 573 100 plus 13,200 plus 2,750. You get 589,015. So it says now the provision for bad debts must be adjusted 4% of outstanding debtors. So now outstanding debtors will be this figure, the adjusted figure. So provision for bad debts, that will be equal to 589.50 times 4%, which gives you, that's times 4%, it gives you 23,562. That's our current provision. So this figure here, current, and this one here is previous. So now if you compare the current provision for bad debts, right, and the previous, you see that there's an increase. This year the provision for bad debts have increased. So the increase is recorded in the as an expense, right? So we go to income statement. When you're doing an income statement, it will look like this, right? We'll have there's an adjustment as well for what do you call bad debts recovered, right? How there's not just only one figure because there was no any other bad debts recovered, right? So your income statement will be written as other incomes, of course you'll have rent income, which is very common. Then you have here bad debts recovered, right? Is this amount here? That's the only figure that we have, right? That's 2,750. Then you go to operating expenses, then under operating expenses you'll have increase in provision for bad debts, that is given by 2,750. Then that is given by 23,562 minus 21,300, right? That will be minus 21,300, that will be 2,262. So that's how you account for a increase in provision for bad debts. It's only the increase that you are more directed or paying attention to. The figure that you calculate, of course, this figure will form part of the provisions for bad debts in the next trial balance. On the next one, when you're looking for previous provision for bad debts, it will be the current that you did today. So these are the kind of things that you need to pay attention to, especially with provision for bad debts. It's always outstanding debts, right? To calculate on outstanding debtors, right? You just make sure that if there's any adjustment that you need to make, you make that particular adjustment. Please, if you like this video, please do subscribe, like, and share, and please turn on your notification so that you don't miss any other videos that I will upload. There will be a number of them. Thank you so much for subscribing, and thank you for liking the video. Thank you.